Well, ladies and gentlemen, at least right now, it is a full blown trade war with China. China and the United States have entered a full blown trade war. China announces an additional 84% tariffs on U.S. goods. So Trump was not bluffing. The 104% total tariff went into place on China. That's a compound from the original 20%, then the 30%, or it was 24%, then 30% was added on Liberation Day, and then another 50% Trump added as a reciprocal for China's 34% reciprocal. Now China has bumped up their tariffs on the United States to 84%. And so here we have the United States and China entering into a trade war. We've got the European Union coming out and saying they're going to be tariffing American goods at around a 15 to 20% rate, although it should be noted that the European Union has said they are ready to do a 0 for 0 tariff with the United States, meaning all of the tariffs will be removed and hopefully other trade barriers like the VATs, like the currency manipulation and the deregulation. Hopefully all of that gets removed. I think there's going to be a deal with the EU. I would imagine there's going to be a deal with both Canada and Mexico. And I would also imagine Vietnam, Japan, some of these other countries, South Korea. You've got South Korea saying they're not going to retaliate against Trump. You also have Taiwan saying they're not retaliating against Trump. So there are several countries, many of these countries that do want to play ball with the United States when it comes to this situation with Trump announcing the tariffs, the global tariffs on everyone. And we're just waiting at this point in terms of the negotiations with these countries, what the deals will look like. It's going to be a very, very good situation for Trump when it comes to a country by country basis, because we would imagine the deals for the United States are going to be a lot better, and we're not going to be getting ripped off nearly as much as we were when it comes to how some of these countries were putting in certain trade barriers against US goods. And that's the whole point, and that's the propaganda spin that we can utilize when it comes to this trade situation with Trump. I am treating China right now as a completely different entity when it comes to these tariffs, their strategic purpose, and their overall value. It seems like with a lot of these countries, the main purpose of the tariff is strictly to get the trade barriers cut down that foreign countries have imposed onto the United States. Now, maybe it's not like that with every country. Maybe it's a case-by-case basis based on certain sectors. If Trump has confidence that we can produce goods that right now we're outsourcing to other countries, he will potentially keep the tariffs on. It's kind of like a situation with Taiwan. Well, listen, we like getting our semiconductors from Taiwan, but that's not a reliable source considering the Chinese looming over them. We rely strictly on Taiwan for semiconductors. It is not wise. Democrats, Republicans both agree on that. So it's really a case-by-case basis in terms of what we need to manufacture. And then China is a whole different thing, which is what I'm mainly going to focus on and talk about, because China right now is manipulating one of our key economic metrics that is driving people crazy. It's the 10-year yield, and it did spike, and it keeps going up. And we're going to go to that in a second. And I think it's because it could also, there's a number of reasons it could happen. Volatility. You should invest into the VIX. I'm sure it's doing well, but there's a lot of volatility within the market right now. And there is an implication of inflation with tariffs. So that's why also might be a reason why the 10-year yield is spiking. But I want to show this right here. So as you can see, this is basically since Trump entered into the White House. It's the last 3 months, and the 10-year yield's been going down. It went below 4%. That was the recent sell-off that we saw. That was the rumor of Trump implementing all the tariffs. Then he announces them, and it goes under 4%. Now it's spiked back up, which you would figure if there's a big spike in terms of this, there'd be a stock market boom. We're not seeing that at all. The thought process here is that China sold a bunch of their treasuries, and it's forcing this up, and it's manipulating it. This is the gold standard economic indicator. You want this to go down and down and down, especially when we see the activity in the stock market that we're seeing. The idea is that people would flock to the bonds, you buy them, this goes lower because more people are buying bonds, and ideally a lot of the money would be in the bonds at this point because of the turmoil within the stock market. But there's manipulation. There, I guess, are also fears of potential inflationary effects of the tariffs, although it's impossible to say for sure how much inflation the tariffs would actually cause, considering, number one, at the core, inflation is money printing. It's the overall devaluing of currency. If it's just certain sectors, it's not really inflation that go up in price, because your purchasing power is still the same in most areas, depending on where the tariffs stay in place. But will this cause inflation? Well, we don't know how many deals Trump is going to do. He's probably going to do a deal with the EU. He's probably going to do a deal with Japan, South Korea, Vietnam. A lot of these countries have already come to the table. I mean, we had Trump last night at a dinner saying these countries, they are begging to negotiate with the United States, which just goes to show you the power. And really, I want to make kind of a bigger point about Trump and just how impressive this really is on what Trump is doing, because China was so infested into our economy. They knew that if we were to do this and cut the proverbial cord that's attached to us in China, at least to a degree, China, they had to have known that if a president was going to do this and have this much, I mean, this is very noble what Trump is doing, because he is sacrificing short term for the long-term success of the United States. You have to know the economy is going to tank. There's going to be so much turmoil. Everyone's going to say, what are you doing? They're going to doubt you. There's no way that Congress together, because that's another thing Trump was talking about, maybe they should have Congress in control of tariffs. There's no way Congress would do something this radical. It is a radical shift. And by the way, it's also a tariff against everyone, because you have China outsourcing their production, giving it to other countries, and then they ship it to the United States as a way around the tariffs. That's not allowed anymore because there's a blanket tariff on everyone. And if you want to negotiate out of it, if it's a country by country basis. So just Trump is really forward thinking here and trying. I mean, you look at our number one adversary, it is China, and they produce most of our stuff. There's a big problem there. And there's a huge deficit of around $400 billion with the Chinese. And the Chinese had to have known, listen, it's almost like you say, hey, go ahead. If you want to do that, you're going to face a huge economic problem, possibly a recession. Trump says, I don't care, I'll sacrifice it. Doesn't matter to me, because it's also going to force the interest rates down. And people are talking about the Fed possibly stepping in and having an emergency cut. We'll have to see if that ends up happening. But the boldness of Trump is really extremely impressive. I mean, you can see these spikes. It's just completely inorganic behavior. And you could say, well, it's unknowingness within the market. There's a lot of speculation. That's part of the reason it could be spiking. But it is also, we think, the Chinese manipulating this as the gold standard indicator. To see this go up with where the stock market is right now, to put it simply, it's not good at all. But again, we think it's manipulation by the Chinese, potentially, along with just the economic situation being one of extreme unknown. And there's a ton of fear in the market, so a lot of these indicators are going to do weird things for a short period of time. That's why you really can't look at a few-day, picture. You got to zoom out and look at month to month to month. If this keeps rising, it becomes a bigger issue. But the point of it is Trump is, I mean, we just have to cut the total reliance we have right now on China. And you could say, well, Trump needs to make other deals in terms of these tariffs to remove them from countries so we don't get into this widespread, bigger picture trade war with everyone. And it looks like Trump has said that that's what he's going to be doing. It just takes time to negotiate. And once we get some of those deals in place, the economic unknowingness is going to be alleviated to a degree to where we're going to see a recovery within the stock market. And we're also going to see, hopefully, the lower interest rates, possibly 3 or 4 rate cuts this year alone. People are saying maybe even 5 rate cuts this year. So you're talking about, that's Trump's first year. This is just quarter one. 4 quarters to a presidency. This is quarter one. This is really like it's early in the first quarter still. It's 3 months into his presidency. So there is a long, long way to go. And you're seeing all of this action, and Trump is just like, I'm sure Trump, because this is how it was reported, Trump decided within 3 hours the total tariff percentage on all these countries, and it was just with a few very close advisors he was talking to. I think Trump just got sick of it and said, you know what, I'm done. We're just going to go after these countries and really be aggressive. It's an extremely aggressive move. This is not, let's do something, very cautious and very coy. This is Trump saying there's going to be immediate effects of what I'm going to be implementing. And that's what I want. I want there to be immediate effects because it's going to produce results in the form of more domestic production. And this is if Trump keeps the tariffs in place against China. We think he will. When it comes to China negotiating with the United States, I think they're going to be forced to. You look at their economy, it's not in a good place right now. They've been dealing with deflation ever since the pandemic. They implemented the zero COVID policy. And so a lot of the Chinese economy is based off of the U.S. consumer base and its access to the U.S. consumer base. They overproduce things already. And now you're in a trade war with a country that you have a 350, $400 billion surplus on. This is not good for the Chinese. There's a lot of propaganda, and the Chinese hope there's going to be all this liberal propaganda against Trump to where Trump caves. There is no way, not when you have the biggest leverage play, which is the U.S. consumer base. That's why all of these countries, this is the number one way you can tell that the United States has the leverage over these countries. Trump has tariffed every single country at every import that comes into the United States at 10%. That's minimum. So you'd think these countries would say, the United States is crazy. They're hitting all of us. Let's band together against us, just trade with each other. They can't. They need access to the U.S. consumer base. That's why they're trying to do these deals. That's why Trump's reporting it. Everyone's reporting it. It's 70 countries. And so it's more of a widespread, situation in terms of the tariffs, but we're really focused on China right now in terms of this trade war, because I think there's going to be negotiations with other countries, and there probably will also be negotiations with China. But even if there are, there's still going to be tariffs against the Chinese, because Trump wants there to be less of a reliance on China, and it's a double negative. It's more reliance on China to produce our stuff, and it's making them stronger and stronger and stronger as a global superpower. So you're killing two birds with one stone, and yes, there's going to be trade-offs. You're going to deal with this. There's going to be things that shoot up. This is not a good metric. To see this spike with where we're at in terms of the stock market turmoil is not good, but we think this is manipulation. And you get weird numbers, you get indicators doing weird things when there's a lot of unknown within the market, and there's a ton of speculation. And this is just one of the byproducts of the things that Trump's implemented that have forced a lot of these economic factors to be a little bit more wonky. But they're going to return to the mean. I think this is going to go back down. And I think you're going to see the Fed cuts possibly within the next 2 or 3 months. You're going to see these deals happen, the negotiations. There's negotiations with Japan. Now you've got Italy wanting to negotiate on behalf of the EU. So this is all happening. It's all in the pipeline. But there's a bigger situation with China in specific. 104% tariff on China. They've got an 84% tariff on us. It's back and forth. They're way more reliant on us than we are of them. The only thing that they can do in terms of a leverage is because they've got such a mass population, there are certain things they can cut off that will hurt U.S. companies. Like, for example, movies. If they don't allow access to, their consumer base access to U.S. movies because of how big their population is, that's something that could be a problem. But they already overproduce things. If they're overproducing things and they lose the U.S. consumer base, they're going to have to come to the negotiating table. And you know how it is with China and Xi Jinping. It's about honor. And so they're not going to want to do it immediately. They're going to stick this out. It's going to be a sign of weakness if they immediately cave into the United States. But there's going to have to be something that gets done with China. And there's going to have to be tariffs that stay on China, because we need production, at least to a degree, back in the United States. The reliance on China is unsustainable. And when you've got a country that produces so much of your stuff. And by the way, now China is looking at restricting our access to rare earths because they control 60 to 70% of the rare earth deposits. And that's why Trump is like, this is an existential threat. We need Greenland because we're going to have to double our rare earth supply. That's why we're doing a rare earth deal with Ukraine. And so you've got all these rare earth deals in the pipeline. You have the rare earth potential deal with the Russians and the Donbass as well. There's 3 different rare earth deals we're going to have to do, because they're going to start trying to cut our access off to these rare earths, which are very important for EVs and phone batteries and things like that. So that's another thing to look out for. But the point of it is there's going to be negotiations with these countries. China has dug their heels in. The United States has dug their heels in. It's China versus the U.S. in this trade war. And the only thing that can really force it is pressure on Trump in terms of the economy struggling and Trump caving in that way because of how much, the economic situation pressures him. But I don't think that's going to happen. So Trump knows that he has the leverage, especially when you talk about negotiations with other countries. We start getting more positive news with this situation, and you start getting more and more conservatives to rally behind Trump when he starts doing these deals with these countries, which inevitably are going to be really good deals relative to the former situation we had with the countries, with all the trade barriers that are going to be knocked down when we do these renegotiations. You're going to start seeing the conservative support really get behind Trump in this trade war, specifically with China. And I think that's what's going to happen. So, look, right now, we'll see what happens in terms of a recession. There's a lot of unknown. I know people are not too happy. This is just the current state of the economy, though. It's 4 years, it's 4 quarters. This is the first quarter. Still very early, very, very, very early. Trump is doing all of this at the start of the second term. And so year 2 is going to be better. Years 3, year 4, we're going to be in a much better economic state. And you're also going to change the relationship we have with China, hopefully, in terms of less of a reliance on the Chinese. Obviously, it's not totally going to flip. We're still going to be doing trade with them. But right now, there are massive tariffs on both countries that they've imposed as part of this ongoing trade war. And yes, the European Union has hit the United States with their own tariffs as reciprocal, but they're trying to meet with the United States, and it's a little bit of a different situation than China. They want to remove all tariffs, and they want to do a deal with the U.S., and Trump has said that we probably will be doing a deal. Boy, this keeps going up. This is like updating every second. I mean, what is this? It's just funny. But either way, guys, that's going to do it for this video. Make sure you follow me on X. Link to that's always in the description.